Trading options is one of the most challenging and exciting ways to make money in today's hectic financial markets. While most people's financial knowledge stops at the word 401k, you must be thinking to yourself, you are one of the special ones. Who else can understand this complex world filled to the brim with incredibly confusing terms that nobody outside your sphere would even begin to understand? To others, options are basically another language, and it must feel good to know something others can't even begin to comprehend. However, the ugly truth about options is that very few people actually master them, myself included, and even fewer profit long term. Unlike stocks, which can be relatively forgiving, trading options without proper understanding can and will be a recipe for disaster. Too many people on the internet read a post about a scenario when someone makes $100,000 overnight trading and uses this example to jumpstart their entry into the options world. But before doing that, I would hope every single one of them sees this video and understands the odds of success. Let's begin with some basics. Options are unlike stocks in one very important way. For every dollar made, someone else is losing money. It's a true zero-sum game, and you're playing it with some of the world's best. The average options amateur doesn't have a trading plan, has no idea how implied volatility affects prices, doesn't understand probability of success, nor does he or she comprehend the risk involved trading options. There is a good reason why most trading platforms require you to get special approval to trade options. You can easily blow up your entire account. On the other side of the table, you have the experts. They are the option trading desks that come in all forms and flavors. Sometimes called equity derivative trading desks, these entities are part of multi-billion-dollar investment banks that combine the world's best math PhDs with supercomputers to form trading strategies that we simply cannot even begin to fathom. That is who you are up against. The real truth about options is that in the short term, if you don't have a set back-tested strategy and you're making plays based on Reddit posts or simple instinct, you will most likely lose. For a lot of people who begin trading options, they get a rush seeing how quickly they can make money if things go right. And if that happens at the beginning, you will simply chase that same rush until you lose bad. Although it may sound boring, beating the game of options requires patience, research, and a long-term view of thinking that very few people have. Unfortunately, for many of you watching this video, the realization of this will come at a huge cost, just as it did to me and many others. A large loss and a lesson in reality. Trading options while carefully accounting for risk becomes a lot easier once you have experienced the pain of erasing your entire account. According to a CME study, 76% of all options held to expiration expire worthless. That shocking statistic should tell you something. The majority of individual options will incur a 100% loss to your investment. Some of you might be thinking, well, why not just sell options instead of buying them? Since after all, option writers, aka sellers, make money if options expire worthless. And while that may be true, selling options is without a doubt the number one way unexperienced amateur traders lose their entire accounts overnight. When buying simple calls or puts, at the very least, the buyer has a perfectly clear idea of what he or she can lose and what he or she can win. This is the incentive for a lot of amateurs. They hear that profits are unlimited in theory when buying calls or puts, and losses are well defined. They begin to buy out of the money options and start losing money quickly. They read, and a light bulb goes off in their head. A realization of how easily they can reverse their fortunes. They can always sell the crappy options they're buying and turn the table around. It's almost too easy, selling out of the money options and consistently profiting week after week. The problem they fail to understand is the massive risks. While buying options is risky, the losses are defined before you buy, so you know the worst case scenario. The opposite is true when you write, aka sell. To understand this, you have to go back to the foundation. An option is essentially a contract that states you, the seller, will provide the buyer with a stock at a certain price at a certain date. If the buyer never exercises and the price never reaches the price they hope for, you simply collect a premium. What you fail to understand is what happens when you sell an option and the price takes a drastic turn for the worst. To comprehend this, let's begin with an example. Let's say you're selling far out of the money options on the SPY, an ETF that tracks the S&P 500. The SPY is currently selling for $300 and you simply sell 10 contracts expiring in 1 month with a strike price of $318. That means for this option to be worth anything, it would have to go up 6%. For the SPY, that almost never happens. So with almost 99% certainty, you can look to collect a $20 premium. That's almost like free money. It will cost you nothing to execute this trade in theory since you're selling the options, which means your account will technically be credited during the transaction. A lot of people will see this and think how great and easy it is just to write these out of the money options and just month after month profit. But the key to this strategy is the phrase 99%. The SPY has in the past, and it will in the future, move up sometimes 5% in a month. Although it's a rare event and the probability is low, if it does happen, I'll show you the damage. Something that has a 1% chance of occurring every month according to simple probability has an 11% chance of occurring in the year. And if you happen to be on the wrong end, even with just 10 contracts, the losses can be devastating. If the SPY in our situation were to go up to $320, you would lose just over $5,000. In theory, a reputable trading platform will limit your exposure to losses by either forcing you to deposit cash as collateral, buying the actual underlying stock, or forcing you to close the position. But this is all up to the platform, something that isn't guaranteed and you should definitely look out for. So while you may enjoy free money 99% of the time, the 1% of the time things go south, they will go really, really south, wiping out your entire account and all your profits. Thank you guys for watching. If you're interested in engaging in a different type of bet, one with significantly more risk, please consider signing up for Bovada, one of the most trusted sportsbooks on the internet. Please use the affiliate code in the description to sign up and bet on this week's NFL games, Euro qualifiers, NBA preseason, MLB playoffs, and much, much more.